And when we're looking at this from the perspective of those extensions, we've fallen from the 30 and then the 20 handle. You can see the 20 handle was the actual resistance level that we kept running into. We didn't get above the 30 handle up here. We never completed the extension target, and we fell back into the direction of the gap fill. Now we've actually overshot it. Now we've actually overshot it. So we're going into the extension long level here, and we're going to find out if the 20 handle below us is actually defending as we move forward into the morning. I want to do a little bit of backtracking here and go back to our leading indicators, because there is an extension long level that we still have on the indices and on the VIX. But you can see here that we have a traditional long setup on the dollar that we just completed a profit target inside of. And then what we've run into in correlation with that profit target is now an opposing measured move short on the dollar. We're running back up into it all the way halfway back short again. And when we're thinking about that from the perspective of dollar weakness, dollar strength, right now there's a negative correlation on the currencies and the commodities, but there's a positive correlation on the indices. Now, last week, Thursday, and for a brief moment on Friday, there was a inverse correlation that we could witness starting to develop again against the indices, meaning that the dollar went down, the indices went up. And this is going to be an incredibly important moment here for our markets, especially since we're going into really the beginning of this summer, where market participants, I want to be very careful about this. It's not the sell in May and go away. That is it's a false narrative. It's true that market participants do try to hedge in May and go away. Right now, is there any need to hedge in May and go away? There's not, is there? We're going straight up in extensions. The VIX is going straight down in extensions. But if we were to break through the dollar's short setup up here inside of this series of longs, then there would potentially be, because the dollar is taking off again inside of its halfway back long from lows of the year to highs of the year. Also important to note here, although Bank has not broken through its long setups, there is an opposing short setup. And then there's the VIX. And we had this little spike here on the VIX and this sell-off, this kind of reactionary moment inside of the indices falling into the 20 handle here a moment ago. And the VIX is running back into a May contract low. That's the May's low. And is there a break? No, there's not a break right now. But it is important to note, where would the hedge in May and go away come back? Where would the hedge in May and go away come back? It would come back if we broke above these 18s. So these are incredibly important levels as we're moving forward here, as we're moving forward into the summer. And if we find ourselves at some point breaking through our leading indicators, 61% lines, we're going to have to pay very, very close attention, because there's an environment here. There's we're essentially getting tighter and tighter and tighter and tighter as we move along. This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.